So the question is, guys, is Nike set to explode? Now, that's what we're going to be talking about in this video here today. I'm going to give you their quick financials. I'm going to give you a little bit of insight. I'm going to do something a little bit different. I'm going to be utilizing a tool to show, in my opinion, what their valuation, what their stock price should be. Unless you've been living under a rock, Nike has really been rocked since 2021. It's down about roughly 60%. Sitting about $74 a share right now, roughly $108 billion market cap. Now, there's been a lot of reasons for this, and I think probably one of the most primarily the main reason was the new CEO that was running the company for a bit. He was more of a consulting type individual, and they did a large shift away from retail, away from wholesalers, like Foot Locker, places like that, and they went more direct to consumer with their direct to consumer business, and it really didn't pan out so well. It allowed a lot of competition to come in. It allowed brands like Adidas, Hoka, those kinds of brands to come in and really eat up a lot of market share. As a result, Nike was cutting prices. It hurt their margin, and then on top of all that, we've had inflation. Right, we've seen inflation just slice and dice consumers. So I think we might be seeing the end to that here pretty soon. So we're going to be talking about that in this video. So stick around because this is probably one you're going to want to watch. Before we get started here, if you're not aware, Nike's fiscal year, we're in their fiscal year 2025, but it kind of starts like halfway through the year and then it goes until the next year. So for example, for fiscal year 2025, it goes from June 2024 to May 2025. Q1, of course, is June 2024 to August. Q2, September 2024 to November 2024. And Q3 is where you see going to the new year from December of last year, 2024, to February 28th of this year. And this is the quarter we're going to have released anytime here because we just had Q2 earnings that I'm going to go over here just briefly quickly. And then Q4 of 2025, it goes basically halfway through this year, March 1st. 2025 to May 31st, 2025. So that's something to keep in mind, especially when we start to kind of value the company. That's what their fiscal year is like, and it's kind of confusing. I kind of wish that they didn't do that. We're going to quickly look at this. We're not going to get too into detail. What I've got here is the last quarter they reported, Q2 2025 and also Q1 2025. This is kind of when things started going wrong. I mean, they were going wrong before this, but I went back to the last two quarters, listened to conference calls, and went through this. So in terms of Q1 2025, and of course Q1 2025 was from June of last year to August of last year, so keep that in mind. Revenues were down about 10%. It was $11.5 billion. Cost of goods sold, I mean, at least they were bringing down the COGS at 12% down, so their gross profit wasn't as bad as their reduction in revenue. It was down 8%. Their gross margin was actually up to 45.4%. It was up 1.2%. They also cut their SG&A down 2%, and then their net income was down 28% year over year. So it was just over $1 billion. Their diluted EPS was down 26%. So this is why we've seen a lot of the stock crashing. If we look at last quarter, and that's Q2, right? That's from September of last year until November, the end of November. So almost the end of last year. It was a little bit of a mixed bag. Revenue wasn't down as much. It was down 8% year over year. But COGS, they didn't cut the cost quite enough on that in comparison to the year before. It was down 6%. Gross profit was down 10%, so a little bit worse off than the year before, and the gross margin was down about 100 basis points as well. Their SG&A slightly better, 3% down, just about $4 billion. So that brought their net income down to the bottom line here, down 26%. So slightly better is 28% the quarter before on a year-over-year basis, and likewise their diluted EPS, 78 cents, was down 24%. Year over year versus the 26% year over year on the quarter before that. So just kind of something good to see what we're going on, and I think to keep in mind the shift that we're happening. Before we get into the actual valuation here, I wanted to show you guys something. This is from their statement of cash flows. And to keep in mind, like this, the market cap of this company is like I said, it's like $108 billion right now. And they've got an $18 billion capital return program that they implemented in 2022. This is for the last 6 months. Repurchases of common stock, 2.2 billion, 2.28 billion. This is a $108 billion company. They are aggressively rebuying, which is definitely going to just skyrocket EPS if they can grow. So that's something to keep in mind. Also, dividends. We know that dividend yields about 2.2%. They've done over $1.1 billion in the last 6 months. And it's not like their payout ratio is insane. I think it's something like 65%. They can definitely finance this. They seem to be definitely taking advantage of their low stock price, and that's only going to help investors' EPS and growth in the future. So I thought we got to value this company. So this is not perfect. I definitely want you guys to know that this is not perfect. Of course, this is just an educational channel. Do your own research. This isn't financial advice. But analysts have their expectations for Nike's revenues, their net income, and what maybe their PE should be. But I went from 2009 to 2024, and I had some historical data. So in terms of their revenues, the max that they had year over year in that time was about 19%. Their min was minus 4.37%. Kind of some anomalies here, right? We saw 2020 was that negative 4.37%, right? Their net income, the max was 126% in a year. And again, a little bit of an anomaly around that 2021. And the same thing with their PE ratios around, it was almost 79. 79. And that was back in 2020, right? Again, so this is right about the same time with the pandemic and all that. But I also brought in the average and the median, which is the middle number, right? So you can see if we just look at the average, their average yearly revenue is, it's about 7% growth. Their net income was about 17% on average. And their average PE is around 31. They're sitting at like 22 right now. So with that information, you can do quite a bit, and you can also look at analyst expectations as well. But I had financial education. I don't know if you ever watched them. One of their members of their team reach out to me. They said they liked my videos, and I have actually been watching him and seeing how his new 1000X software has been working, and I've been impressed. So they gave me access, and they also gave me a link for you guys. It's down in the description if you want to sign up. You fill out a form. They'll get you on a phone, see if you're a good fit. And as you guys know, I'm not like I don't partner with anybody that I don't believe in the software. I don't believe in it. And this software is actually really good. I'm gonna go through it a bit for a couple different things, but saved me a ton of time. And I'm gonna show you how it works right now. And this is just one way of looking at what a potential stock price could be for Nike. So basically what this is their projections portion of 1000x.com. And you can project the revenue growth, you can give the percentage, you can give the net income growth, and then you can give what you think a PE and value, low and highs, and it'll give you a price. And it's all legit. You can actually do it more advanced. They have a more advanced section as well. But we're going to do just this one right now. So basically what this is just basically the formula, PE equals stock price divided by EPS, but it's got the shares outstanding. You've got your EPS through net income, and it does it all for you. So it's great. So in terms of 2025, keep in mind, let's start here. 2025, I'm just going to put 0% because it's a bit weird because we're going to be, like I said, 2025 goes only until May of this year. They're saying on their conference call that they expect, Q3 revenue to be down low single digits or double digits rather. Gross margins down about 350 basis points. But I think in the back half of the year, revenue might actually grow a bit. But we're going to go into 2026. So keep in mind 2026 is going to be like halfway through this year until halfway through next year, and then we're going to go into 2027, which is going to be basically half the same thing, June 2026 to May 2027. So we're going to go in 2-year increments. I'm going to keep 0% here just for, argument's sake here. We'll keep the PE about what it's at right now, 22.71, and there's our price. Stock price is 73.58. I don't know the exact PE, but I put 22.71. Now, for 2026, for the year of 2026, what are we looking at for revenue growth here? Okay, well, I'm going to put revenue growth at about 20%. Keep in mind, this is the bull case. We're going to do a base case as well. Now, Why 20%? Well, a lot of analyst expectations, I mean, some of them are up there like 50%, some are 25%. But if we look at the max, it was about 20%, 19%. Again, keep in mind this is the bull case. So I put in here, I'm showing you guys how to do this, the revenue growth at 20%. Net income growth. Net income growth, I'm going to put at 40%. Keep in mind, again, and I do think this is possible, but we are being bullish here. In terms of net income, the max we've had is 126%. I don't think it's going to be that, but I'm going to put it at 40% because they're buying back so many shares. They're boosting their EPS that way. It's not something that's out of the question. I mean, their average is around 20%, right? But we're coming off really rough times, right? So I'm going to put 40%. I don't think that's unrealistic. But again, like I said, this is the bull case. In terms of the PE, I don't think it's actually unreasonable at 35 to 40. Right now we're at 22, but 35 to 40, I mean, we've had an average of about 31, right? I mean, 25 is really quite fair for the company, but we're doing a bull case, and we've seen in super bull cases it'd be close to 80. So 35 to 40, I don't think that's completely unreasonable. So that shows that we're about $159 to $182 price target. Now, if we say that the next fiscal year we have the same thing, which I don't think is unreasonable if we see growth continue, and I'm going to talk about later why I think that is the case as well. We're going to see, by 2027, fiscal year 2027, anywhere from 223 to 255. If you don't like these, you can change them, right? Like if you think, okay, well, this is only going to be trading at a 25 multiple. On the low end here, we're seeing still $160 a share, but we're doing our bull case here, right? So 35 PE, price to earnings, right? So we're seeing here, but it could be anywhere from 223 to 255. Base case. I'm not going to do there's also a bear case. I'm not going to do that just because I'm not sure how much worse can things get, right? They can obviously get worse, but I believe that's not going to be the case. I've already inputted these, so we don't have to do them individually, but I'll talk about them quickly. Again, I did the same thing for this year for 2025, 0%. Now, in terms of the revenue growth in 2026, I put 6.95% because that's the average. So base case, I'm thinking is average. We're going to be much higher than that, I'm sure, in the next couple of years. 3 to 5 years, but we're just going to do out the next 2 years just for argument's sake. Revenue growth, I put at 17.27 because that's just the average that we've had since, the last decade and a half. And so I think we're going to do much more than that. In terms of a PE, I put 25 to 30, which is very fair. Again, the average is higher than that, 31. Median, the middle level number is 25.6, so very fair. So that gives us a price of $95 to $114 a share. Again, likewise, I did the exact same thing the next year because I think that's reasonable. We're going to see this growth phase go out over a couple of years. That gives me even that, 112 to 134. So if you look at these projections, that gives us anywhere from $112, right, in 2 years, $112 a share to $255. So that's about 50% to 244% gain. And that's why I think Nike's a banger right now. Like it's kind of a no-brainer in my opinion. And this tool makes it really easy to do as well. The last thing I'll say about 1000X here is I didn't think that this would be that useful, but just everything is here. You want to look at Nike's, and I was listening to Nike's earnings call on here. It's all here. You don't have to go search for it. Same thing with the SEC filings. I thought, well, how hard is it to go find them? It's actually a lot easier just to grab it, right? Nike, there you go. There's their 10Q. Boom, we're in it, right? As it slowly processes there, but it's all here. So it's actually it's really useful. You can compare companies. You can search just the metrics here. We're with Meta, with all the different metrics. So yeah, it's really. I'm actually really impressed. So like I said, links in the description, guys. If you just want to check it out, I don't think there's any downside in checking it out. So now I've told you the stock price. I think it'd be 112 to 255. Well. What's some other reasons that I think that? Of course, one big reason is the dividend. This company has been increasing the dividend for over 23 years. Don't mind this ad is just massive here for some reason. But anyway, we'll be able to see it regardless, I guess. This is why Yahoo Finance really gets under my skin sometimes now. But anyway, I mean, you're looking back in 1987, it wasn't even close to a cent. And every year they've increased that dividend. Every year. Now we're at, there we go, it's gone now, 40 cents. 40 cents a share. And like I said, they have the ability to do that. And so while you sit and wait for this thing to recover, you're getting over 2% of your money. So again, in my opinion, that's why it's just a no-brainer. The other thing we got to keep in mind here is the Fed funds rate. Now, this doesn't just go for the U.S. We're looking at the U.S., but I live in Canada, if you guys don't know, and interest rates just dropped again here today. I think it's going to be a global phenomenon. The U.S. is going to be dropping interest rates. We're still pretty high. The target rate's about 4.5%. What do you guys think Trump's doing? I mean, I don't think a lot of people talk about this. I think a lot of this tariff rhetoric, all this kind of stuff, is he wants interest rates lower, and just watch what happens when the interest rates go low. We've seen it before. Now, does that mean we're going to go rock bottom down here about almost 0%? I don't think so, but I think it's pretty clear that we're going to have cuts this year. That's going to continue, and that's only going to help this kind of consumer discretionary, right? But it's only going to. So anyway, the next thing on my list here is the CEO, Elliott Hill. I'm not going to go too much into him, but this guy has been with the company forever, and this is the guy who's bringing it back to the roots. They're saying that they're bringing it back to sports the way that it should be. It's really going to be focusing on not having these price cuts anymore. Like, so for example, they've had these price cuts before where in their direct to consumer, they've had to cut things. They're trying to clear channel inventory in their retailers, stuff like that, right? So I really believe that bringing Nike back to its roots, and he's had a stellar track record, is really going to help this company grow. And this might not be a 1 year turnaround, but I think in the next 3 to 5 years, you're going to see a huge increase in the stock, in my opinion. Like I said, this is not financial advice, guys, and I believe that this is at least a doubler, and it's a good, solid company to put your money in long term, or at least put my money in, because this is just my opinion, guys. Anyway, so just a quick video on Nike. Love to know what you guys think. Again, there's a link in the description for 1000X if you want to check it out. That's going to be it for today, guys. I'll see you in the next one.